Hello, good morning, ladies and gentlemen, and how are you all doing today? I'm so excited to be with you here this morning as we get prepared again for another trading session, that is the London and the New York session. Well, it has been quite a slow start to the beginning of this morning. We've been seeing that market has been relatively calm as participants continue to digest data from the FOMC and various economic data from the UK and the US docket. So this morning we are going to be, as usual, taking a technical dissection of the current market structure in anticipation of getting ourselves ready for the new day. And also we're going to be looking at how well this pairs that we have been monitoring since the beginning of the week has been doing, so that we can also see how we can manage our existing position while we look out for more opportunities on this instrument. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to gather here as a community to get ourselves prepared for the London and the New York session. So we have a bucket of instruments on our watch list for the week. So we have been monitoring the USDJPY, the GBPUSD, the pound sterling, the GBPUSD, sorry, the XAUUSD, and the USOil spot. So these are instruments that I published during the course of the weekend. So if you do want to have an holistic view or a background knowledge of how we got to this point, because basically what we are doing here every morning is to review the 1 hour time frame. So if you do want to have an idea or a background knowledge of how we got to the current market structure we have on our 1 hour time frame, why not check out that video? I have the link in the description box of this current video, so you could check it out and see how we got to this point. And I've made things a little bit more easier, as this video is duly time-stamped so that you can easily navigate to whichever aspect or scope that you want to be focusing on. So you're all welcome once again, and let's confirm that we are good to go this morning. So if there are any distortion whatsoever in my sound quality or the video quality, please kindly let me know in the comment section, as this will go a long way in helping me to improve the quality of what I am presenting to you guys. So let's dive right into the business for today. So as usual, the first thing we normally do here is to ensure that we keep tabs with the economic calendar, as we want to see what majority in the market are looking forward to, and this will also help us in better timing ourselves and at the same time position ourselves in such a way that we can catch any potential trading opportunity ahead of the event, during the event, and after the event. So with that being said here, let's dive right into the economic calendar to see what is really going on. What is our expectations here for today? So today is Thursday, May 25, and what we are looking forward to today is coming in from the US docket, and this is the gross domestic product annualized for Q1. And the GDP annualized is always released by the US Bureau of Economic Analysis, and it gives us an insight into the monetary value of all goods, services, and structures produced within the US economy. So it's a very good indicator of the pace at which the economy is either growing or decreasing as regards to the economic situation. So this is one high impact event that majority will be looking forward to, and this is coming up in about 3 to 4 hours from now. So we want to anticipate that by getting ready, and if we have existing position, we want to ensure that we secure them, because we might likely see volatility happen. So we are going to be looking at the chart from a technical standpoint to see how we can position ourselves ahead of this event across the USD pairs that we have been monitoring. So the previous data came in at 1.1%, and we have a general consensus projecting another 1.1%. So majority are thinking that things have not really changed. So let's see what the actual data is going to be. Will it be just as expected, below expectation, or probably beyond expectation? So this is going to have a whole lot of impact into how price will be moving. And in that regard, let's dive right into the chart, and as usual, the first commodity we are going to be taking at this morning is going to be the US oil spot. So on the US oil spot, we have been quite profitable on this commodity since the beginning of the week, as we have been selling. We have been buying the US oil. I think we bought at above the key level that we identified at the beginning of the week, around the $71.50 level. And since then, we have been adding more position at key levels as we rode the move all the way to the upside. But something interesting happened here in the last 48 hours in this market. So after price action got into that $74.40 area, we begin to see a situation here. Hold on a second. I just lost my tool. Give me a moment. Let me figure that out. Okay. I wonder where my tool is. Okay, so I will just go right from the toolbox on my right hand side. So we have noticed here that since the beginning of this, in the last 48 hours, since price action tested the $74.40 area, we have been seeing a situation here where price action has been caught within a range between the $74.40 level and the $73.50 area. And what this simply tells us is that there is a level of indecision in this market right now. And whenever we have indecisions like this in the market, it's a clear sign that a majority of participants in the market are looking forward to a catalyst that will give an insight into where price action will be going. And if we look at the fundamental aspects, we have the GDP data coming in, and you all know how the US oil commodity is always in correlation with the US dollar. And since we're expecting the GDP data today, majority might likely be looking forward to this data. As a result of this, we have this old chopper situation. And another thing that happened, I think a couple of days ago, from the energy minister from Saudi Arabia, who also made a very strong comment on social media, where he admonished those who are actually selling, shorting the US oil spot, and he said that they are going to be, let me use this word, ouching anytime soon. And this is more of probably a threat, or probably there is something cooking up behind the scenes that might likely skyrocket the US oil spot. So we want to be very, very careful. And as a result of this, we have been seeing a sort of risk-averse situation going on in this market. So if we are going to be looking at things from a technical standpoint, based on what is going on the chart, we all know that the price movement gives us an insight into the psychology of the participants in this market. So with a flat channel going on here within the last 48 hours, it is appropriate that we remain very patient, waiting for signals to come in before we want to be joining any potential move at this point. And you all know how we do it. Whenever we have this kind of simple flat channel, all we want to be doing at this point is to remain patient, waiting for a signal to come in the form of either a breakout of the resistance line for a buying opportunity, or breakdown of the support line for selling opportunity at this point. So it's very important that we remain very patient. And for those who still have a buy position running right now, I would advise you to move your stop losses accordingly to secure this current position. And from the look of things right here, I am of the opinion that an area around the $73.50 level zone area seems most appropriate to move your stop losses to secure this current position. Now let's look at what we are going to be doing today. How do we intend to plan our trading activity ahead of the London and the New York session? Well, the first thing I would like to say here is that let's acknowledge the fact that price action has been bullish, and to acknowledge that we already connected the series of higher lows here, which has given us this resultant bullish trend lines you can see on your screen right now. In fact, we have a couple of trend lines here to emphasize the strength of the buyers since the beginning of this week. And of course, whenever we have trend lines like this, it's going to be serving as a yardstick that will be guiding our trading activity for today. So what this simply means is that as long as price action remains above that bullish trend line, we shall feel comfortable in our buy positions while we look out for more opportunities to add more position to our existing trade. But if at any point in time the trend line is breached, that is, price breaks down the trend line at any point, then at that point we are going to start considering a bearish momentum. But we are not going to be jumping into a conclusion at that point, as we still need significant confirmation that sellers are actually coming in this market before we want to be opening a sell position in this market. And what we want to see on this chart that will give us a confirmation that sellers are actually getting momentum is price action retesting either the $73.50 level or the trend line here, or it could even go as far as the $73.90 area. But one most important structure we are looking forward to confirm that sellers are gradually gaining that momentum is a form of a reversal pattern. It could be selling pressure on our lower time frame, 10 minutes, 5 minutes or 15 minutes time frame. Look out for selling pressures. Inability of buyers to break above this level is a very beautiful sign for us to join a bearish move, after which we could have a sell stop order below the $3.50 level to join that decline to the downside. So this is how we are going to be intending to sell the US oil spot for today. And for me, this is more or less going to be like a retracement of the impulsive move that we have been witnessing since the beginning of the week, as those who had bought at a very cheap price, let's say at the $70.65 area, will at one point want to be doing some profit taking, which will obviously reflect on the chart as a retracement to the downside. So this is what we are going to be looking out for to sell the US oil spot for today. And to further emphasize the strength of the sellers at this point in the market, you would notice here that since Tuesday, I think Wednesday, yesterday, we saw how as soon as price action got into, got into that range around the $74.40 area, we have been seeing selling pressure, which is a sign that buyers are finding it very, very difficult to break out of that level. So if this continues and leading to the breakdown of both the trend line and the $73.50 level, then we will have no other choice than to start considering selling the US oil spot today. But trust me, I'm going to be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. So talking about the after talking about the bearish expectation in this market, it's always important that we also take into consideration the potential that the buyers have to as well, so that we can also mark out our structures so that we can be part of that move if it so happens that buyers come in at any point in time. Now, looking at the current structure we have on the chart right now, price action caught within a range between the $74.40 and the $73.50 area. What do we want to see on this chart that will make us feel confident to change our buyers from bearish, at least in the meantime, to a bullish momentum? Now, you all know how we do it here. Whenever we do have a flat channel, we want to see a breakout of that structure to signal that this whole structure we have here is turning out to be a trend continuation pattern. So for us to buy the US oil spot today, we would rather wait for price action to break out of the $74.40 level, and if possible, we have a retracement back into structure on our lower time frame, giving us signs that buyers are actually gaining momentum here and sellers are finding it difficult to drop back below. Then at this point, we want to be considering buying the US oil spot. So buying the US oil spot today is going to be right above our $74.40 area. I will be with you in the comment section as usual to give you updates as at when due, whenever we have a simple setup that we can take advantage of. So if you have any questions regarding what I just explained, feel free to let me know right in the comment section. So I will be moving on to the next instrument, which is the GBPUSD. And let's look at what is happening on the GBPUSD chart. All right, so on the GBPUSD, we have been selling actually. At a point in time we bought, but most of the time this week we have been selling the GBPUSD. And what was it that we saw on this chart that incited the idea of selling this instrument today? So at the beginning of the week, we acknowledged a key level at the 1.245 after analyzing the higher time frame. So that is why I said, if you had not watched my video that I shared during the course of the weekend, I had a live session, you might want to watch it so that you can have an idea of how we got to this point, how we were able to identify this key level that is supposed to guide our trading activity for the week. So check the link in the comments in the description box below to see that video. So here we are on the 1 hour time frame, and at the beginning of the week we had this choppy situation going on just exactly above the key level at the 1.245. So we had a range between the 1.24720 and the key level, giving us a sign that there was a level of indecision in this market at the beginning of the week. And of course, whenever we have this kind of flat channel, we have no other choice than to wait patiently for price action to give us a signal, which definitely will come in the form of either a breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunity. And as you saw here, since the beginning of the week, at no point in time did we see price action break out of that resistance line, and instead price action had been dropping, finding lower lows. And prior to our live session on Monday, we already cited this breakdown of structure here, and I told us all that we already have a bearish signal and we want to see price action do a retest of structure to give us the confirmation we are looking forward to sell the GBPUSD. And so this is exactly what happened. Price action came back to retest structure. In fact, it went to as far as the 1.24650 area, and as a result of that, we had our sell stop order below the structure, and since then we have been selling the GBPUSD. Then we also had key structures like the 1.24150 area, where we also had the privilege of having another sell stop order to take advantage of another selling opportunity. And one thing we observed during the New York session on Monday was the fact that as soon as price action got into the 1.23900 area, we saw another engulfing bullish candle to confirm that we are within a very strong buyer's territory. And as you can see, since last week, we saw how that area had been a strong buying niche. Then on Wednesday morning, I think, was on Tuesday, I shared on my public platform, my Trading View and Telegram platform, that because of this engulfing candle, we are going to be looking out for buying opportunities above the 1.24150, which actually gave us some pips there, as we saw price action move about 55 pips in our favor. And you know how we do it here. Whenever price action moves significantly in our favor, we want to be moving our stop loss accordingly to secure or lock in some profit before we saw this bearish move began again to take us out of that position with a small profit. And during our live session yesterday, we were anticipating a bearish move, and the reason why we were anticipating a bearish move yesterday was because of the fact that as soon as price action got into that key level at the 1.245, which happens to be the support line at the beginning of the week, remember, and it also shares a confluence with that bearish trend line that we identified on the 4 hours time frame. So with a sharp rejection of the structure followed by an engulfing bearish candle, it was a beautiful sign for us to sell. And what we agreed here during our live session yesterday is that we are going to be having a sell stop order sitting just right below the 1.24150 right here to be part of the bearish move to the downside. And I told us all that we should be having our stop losses close to the resistance line here at the 1.245, which we said will be dovetailing to a minimum of 25 pips to a maximum of 30 pips stop loss on this current position. And as you can see what happened here, I think a couple of hours after our live session, we saw our price action broke down that level, triggering our sell stop order. And for those who missed out on that opportunity, the market actually came back to give us more opportunities as it came back to do a retest of that structure. And since then, price action has been dropping to the downside. So on the GBPUSD so far, you would have, if you only have one position running, you will be currently running with about 60 pips. And if you had two positions running after the breakdown of the 1.239, you have much more than that. So congrats to everyone who has been part of this profitable journey. As you know what we do right now, whenever we have price action move significantly in our favor, the next thing we want to be doing is to secure the current position by moving our stop losses. So for those who still have a running position on the GBPUSD at this point, what we want to be doing right now is to move our stop loss. And at this point, considering the current market structure here, I'm of the opinion that anywhere around the 1.23840 and this area seems most appropriate to have our stop losses placed at this point, as we want to give room for price action to breed. Now, going into the London and New York session today, what is going to be our plans? What do we expect to do in this market so that we can be part of another wave of trading opportunity? So the question at this point now is, will this bearish momentum continue to the downside, or are we going to be having a situation where a reversal pattern will come into inside another wave of bullish momentum? So the first thing I did here this morning was to acknowledge the fact that as soon as price action got into this 1.23320 area, we saw sharp rejections. We saw presence of buyers gradually coming in, negating all attempt by the sellers to break down that level. And because of the situation here, we need to be very, very careful. And that is why we have moved our stop losses to secure this current sell position. And the only way we are going to be adding to our sell position from the structure is only if price action will break down the 1.23320 level to the downside before we can ever be thinking of adding more sell position at this current point in time. So let's keep this in mind. We are only selling or adding more position if price action breaks down, retest the 1.23320 level. So you can map that out on your chart so that you can have it as a point of reference. So with that being said here, we also want to consider the potentials of the buyers too as well. And since the early hours of today, we have been citing this buy pressure resuming around the 1.232. So if we are going to be buying at this point, where do you think we can actually do a buy? So from the situation of things right now, what I want to do here is to bring out my line chart and let's map out some key levels which we are going to be using to guide our trading activity. So what I'm going to be doing here is to consider what has been happening in this market since the beginning of yesterday, that is the last 24 hours, and obviously price action has been bearish in the last 24 hours. And to emphasize that, we want to be connecting the series of lower highs, and if we do that correctly, we should be having something like this to the downside here. But I'm also looking at since the beginning of the week too as well. But let's draw this out first of all, and what I'm seeing here is something like this, something like this. Let me thicken this a little bit so that I can't even find my, I don't know what happened here. I can't even find my, I'm so sorry about this. I wanted to bold in this a little bit, but I can't find my Okay, I'll sort this out before tomorrow, but let's just work things out with this one. So we have a trend line here which has been respected at least since the early hours of yesterday, and price action continued to range to the downside. So now another thing I want to do here is to connect these levels together. So we have that area around the 1.23750, I think. Okay, 1.23750. So I will extend this out a little bit. Then I would like to give it a different color, which unfortunately I can't do that right. Okay, I should be able to do that. So let's label it 1.23750 level. Okay, so I want to give this a different color. Let's use a red. Okay, a dirty red, I guess. Okay, so we have something like this. Now let's bring back our candle chart. So let me do some alignments here to suit this. Okay, so we have it at 1.23720. So I'll do some readjustment. So beautiful. So we have something like this going into the New York and London session today. So if this whole buy pressure we have been witnessing above the 1.23220 level continues, then we want to be anticipating a buy opportunity above the 1.23720. And if we are going to be buying above that level, remember we are not having a buy stop order in this kind of situation. Price action has been bearish since the beginning of the week, so we want to see price action give us a confirmation that buyers are actually coming in and that we are having a reversal pattern gradually unfolding before our highs. So what we are going to be looking out for here is a breakout of structure, and as you can see, we already seen signs that price action is about breaking out of that level. And as soon as the breakout of the structure happens, we want to scale down into our lower time frame, like our 15 minutes time frame or 10 minutes time frame, to look out for confirmation, which will reflect on the chart as a retest of these levels. So it could be a retest of the 1.23720 or a retest of the trend line, but most importantly, we are going to be looking out for reversal patterns like double bottom structures, signs that sellers are finding it difficult to find lower lows in this market. Then at this point, we want to consider buying. And one thing I would like to buttress here is that when price action breaks out of the 1.23720 and start finding buy pressure around that area, it is very important to note here that price will be back at a very strong buy zone that was observed during the course of this week. So if price action climbs above that area and start doing multiple retests of that structures where sellers find it difficult to drop back below the 1.23720, then we are going to be looking out for buying opportunity around that area. So that is the only way we are going to be buying the GBPUSD for today. And I already explained earlier that we are going to be looking out for selling opportunities right below the 1.23320, as we need price action to take out all the buy positions here to give us a confirmation that the bearish momentum is still very valid in this market. So let's keep this in mind. You can mark it out on your screen, screenshot my screen if you want to, so that you can be able to use it as a reference point whenever you're about to make your independent decision on this instrument. And trust me, I will be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. So that is that on the GBPUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So moving on, right now we are going to be taking on the XAUUSD. So on the XAUUSD, I was able to give you an update this morning. So let's first of all run through what has really been going on in this market in the last 96 hours since the beginning of the week. And in fact, if you look at this whole structure closely here, you will see that price action has been very choppy, at least since last week Thursday. So it's exactly a week right now, and price action is still caught within a range between the 1,980, which happens to be our key level for this week, and the 1,957 to give us an insight into the level of indecision in this market. So we have about a $23 gap here where price action has been ranging within, and for me, this is a sign that there is a very strong indecision in this market. And one of the things that we could relate this to is the US debt ceiling negotiation, which is still going on right now. And we have about a week for that to happen, because if it's on by June 1st, if this is not resolved, then the US will be witnessing its first default. I think the last time there was a default was in the 70s. So we are going to be seeing the first default, and this is causing a lot of risk-averse situation in this market. And you know how the gold is a safe haven for the US dollar. Just in case the US dollar is faltering, we want to see people come into the gold to buy the gold with their dollar. And one thing we have seen here since the beginning of the week is that price action has been trading below our key level. And remember, we had our key level here at the 1,980, and coupled with the fact that we also had a choppy situation at the beginning of the week. It was quite a very long one, because it took about 36 hours, I think, before the decision of selling was finally pronounced in this market. So you saw this flat channel at the beginning of the week. Remember, we had our sell stop order below the support line here, had the $1,971.50 level, which triggered our sell position at the beginning of the week, and we rode the move all the way into that demand zone here, about 170 pips in our favor, before the rise of buy pressure resumed again around that area. And on Tuesday's live session, we acknowledged the fact that price action was sitting on a very strong demand zone just right here, and we considered that price action could likely respect that line one more time to push price to the upside. And we identified a simple setup on the 50 minutes time frame that will help us to guide that bullish momentum. If you remember, I think let's scale down into the 15 minutes time frame. I think I still have that structure. Okay, I have it right here. So this was the structure we identified on the during our live session on Tuesday. So we acknowledge the fact that price was sitting on a very strong demand zone. We are seeing signs that a reversal pattern is likely coming in, and what we did here was to identify a neckline which coincidentally sits along the $1,960.50 level. And what we said here on Tuesday is that we want to be buying after the breakout retest of that structure, and that was exactly what happened. As you can see here, we saw the breakout retest of that level, and since then price action continued to rise to the upside. And we also agreed to add more position if price action breaks out of the 1,964, which also welcomed more opportunity in this market. So it's still been a quite profitable week for us. We had moments where we bought, we also had moments where we sold to, and thank goodness we were able to maximize the potential within this whole range. Now, during our live session yesterday, we acknowledged the fact that price action was ranging between the 1,980. So let me show you that quickly. So we had the situation here during our live session yesterday where price action was ranging between the 1,980, which happens to be our key level at the beginning of the week, and the support line at the $1,971.50 area. And one thing we said here yesterday is that we want to see price action break out of the 1,980, retest that structure for us to buy. And I made mention of one thing here yesterday where I said that I'm going to be breaking my rule at this point, that I will be having a buy stop order at that point, and I got my fingers burnt actually. So remember, I told you that because of this area is a very strong selling niche since the beginning of the week, there is a likelihood that sellers could still respect that level to push price to the downside, that we will need price action to break out that structure, give us a signal, and wait for confirmations, which will come in the form of a retest of structure. But for the fact that I already had made some profit on the XAUUSD this week, I said here that I will be leveraging on my profit that I made so far this week to leverage on that position to test and risk that move, which I did actually, and I got my fingers burnt as we saw price action actually moved in our favor about 55 pips before we saw this whole situation drop to the downside. So if you are taking that position and moved your stop loss, well done to you for doing that. I was not on the screen when this whole thing happened, and I missed out on that, and I was topped out at that point. Then we saw how price action continued to the downside, and remember yesterday we had a sell stop order below the 1,971 after identifying that flat channel that we saw here at the beginning of our live session yesterday. So with a sell stop order below that area, we were lucky enough to be part of that move as we saw price action move over 170 pips in that direction before we begin to see the buy pressure resume. And if you recall vividly what my explanations were on the XAUUSD yesterday, I told us all yesterday that even if price action breaks down the 1,971, doesn't change the fact that the whole situation here is still looking bullish at this point. And one thing I signified yesterday was this breakout of this bearish trend line. Remember, we had this bearish trend line figured out at the beginning of the week after we connected a series of lower highs, remember, and we saw the breakout of that structure. And from a technical standpoint, I illustrated here yesterday that when price action breaks out a significant structure like this, at a point in time, price is likely coming back to retest the trend line. And if you look at this closely, you will see that price action retested the trend line, and in fact we have been seeing a whole lot of choppy situation going on around that area. So the question for today now is, will this turn out to be the beginning of another wave of bullish momentum as price action has just retested that level to incite a potential move to the upside? So how do we intend to take advantage of this move right now? So let's talk about the bullish expectation first of all from this current structure. So I will zoom right into where our center of focus is going to be for today, and that is that area between the 1,964. As you can see here, this is the resistant line in the last how many hours now? In the last 12-15 hours, I think. And we have the support line here at the 1,957. And of course, you know how we do it whenever we have this kind of simple setup. We want to wait patiently for the market to give us a signal, which is going to be coming either in the form of a breakout retest of the structure for buying opportunity or the breakdown retest of the support line for selling opportunities. And with the situation of things right now, well, I got some contacts where some people actually bought from the 1,957 right outrightly from that point. Well, if you are taking advantage of that move, kudos to you for being on standby to have caught that move. But we are going to be looking out for price action breaking out of the 1,964, retest the structure a couple of times on our lower time frame, then we could actually take advantage of a bullish move. So I want to see price action take out all the sell position along the 1,964. We need to be very, very careful here considering the strong bearish impulsive move we witnessed yesterday. And one thing about this whole situation is that it could still turn out to be a retracement of that impulsive move. Let me show you here what I mean. So it could still turn out to be the retracement of this impulsive move where price action could get into a golden zone area, which is always between the 50 and the 78.6% of the previous impulse leg to incite another wave. So we want to be very, very careful while taking a buy position above the 1,964. So this is how we are going to be doing it and managing our trade. So what we are going to be doing here is to wait for a breakout of the 1,964 to happen, and then we scale down to our lower time frame, like our 10, 5 or 15 minutes time frame, to look out for retest of structure. We want to see that retest happen. We want to see signs that buyers are gradually gaining momentum, that sellers are finding it difficult to drop back significantly below the 1,964 for us to join this bullish momentum. So if we start seeing that kind of sign around that area, then we want to get ready to buy, have a buy stop order at the neckline of a reversal pattern there, join the bullish momentum all the way to the upside. Now, there is a caveat to this position that we're about to take if price action breaks out of the 1,964. Remember, we have a key level at the 1,971, which initially was our support line at the beginning of the week. So if price action gets into that structure, you know how we do it. We want to move all our stop losses to secure all positions while we wait out to see how price action will be reacting to that area. So depending on what happens there will now determine if we are going to be adding more buy position or getting ready for another sell momentum. So what we are going to be doing here is if we start seeing rejection of this level, then we want to get ready to sell. And if price action breaks out, retest, then we look out for more opportunities to buy. Trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due on this current structure. So in mind too as well. And if that is going to be the case, then there is a high chance that price action could break down the support line here at the 1,957, retest of structure to incite another wave of bearish momentum to the downside. So if this happens, we want to be part of this bearish move to the downside. So this is how we are going to be selling the XAUUSD today, looking out for selling opportunities only if price action breaks down the 1,957. So that is that for today. Okay, Leon, good morning to you, Leon. Trust you are doing well. How are you? Okay, you said there is internet issues. Okay, how about now? Please let me know quickly so that if there's a need for me to switch my router, I will do just that quickly. Please let me know in the comment section if things are quite good right now or not. Okay, thank you. All right, so like I said, we are looking out for selling opportunities if price action breaks down the 1,957. So we have a very simple setup to guide our trading activity today, looking out for selling opportunities below the structure, or we look out for buying opportunities above this area. And I made mention here that we want to see price action. As soon as price action breaks out of that resistance line, we want to be very careful, to be on standby, be around to move our stop losses accordingly to secure our position as price action continues. Okay, Leon, all right, thank you very much for that feedback. Kwaku and Nim, thank you very much. I had to look at that name again because you corrected me one time that it is Anim, not Amin. How are you doing, Anim? Never knew you were around. Trust you are doing well this morning. All right. Okay, so let's move right into the last last pair for today, which is the USDJPY, which this is the first pair that actually got to our projected TP target. So we have the USDJPY right on our screen right now, and price action actually hit our TP target yesterday, giving us about 95 pips on that position we took above the 138.750. So let's quickly run through how the week started for us on the USDJPY so that we can have an idea of where we are coming from and how to project what our expectation is going to be like for today. So looking at the current chart here on the 1 hour time frame, this was what we were able to spot at the beginning of the week. So remember that we had our key level sitting at the 137.800. So this was our key level at the beginning of the week. So I used to say that if you had not watched my video on my weekly analysis, please do that so that you can understand how we got to the point of having our key level along that area. So we had our key level at the 137.800, and what we agreed at the beginning of the week that as long as price action remains above our key level at the 137.800, we continue to look out for buying opportunities. And if price action ever drops down the key level, obviously we are going to be looking out for selling opportunities. And what happened in this market was quite interesting, as we saw our price action climb back, though the week started on a bearish note. As you can see here, the week started on a bearish note, price dropped to the downside, and we saw price come back to the upside again, giving us a clue into the level of indecision at this point. So we had a flat channel to work with at the beginning of the week. And with this kind of situation, it's further informs us that there is a level of indecision in this market. And with that kind of setup, you know how we do it. We have our buy stop order at the resistance line if a breakout happens to buy, and we have a sell stop order below the support line of the channel to sell if price action breaks down the support line. And what we had here was quite interesting, as we saw price come back into the structure, and since then we saw buyers continue to respect the 137.8, negating all attempt by the sellers to break down that our key level. And it was at this point we realized that buying the USDJPY will make a whole lot of sense for the week. And we saw how price action moved significantly well since that time, and I shared on my Trading View and Telegram platform that we should be securing our position, as we saw price action move about 70 pips on that. I think during the first 12 hours of Monday morning, we saw our price moved about 70 pips. We moved our stop losses accordingly. We saw sell pressure come in, taking us out of that buy position. And I mentioned there on Monday that we are going to remain patient, waiting for structures to mature before we want to be either adding more position or getting ready to buy. And one thing we noticed here on Wednesday morning on Tuesday morning was the fact that price action now went into a choppy situation, now giving us a range between the 138.750, as you can see here, and the 138.400. It was quite a very long range which lasted for about 48 hours in this market. Now we saw this old choppy situation go on, and we agreed here on Tuesday that a breakdown of that structure will be giving us an opportunity to sell. And unfortunately for us, we actually saw a sell position triggered at this point on Wednesday, and we talked about this yesterday. I told you that I still had that position running. It was running in a loss as at yesterday morning, but you can see what happened here. We were taken out of that position with a 35 pips loss on that one, which is, it's okay. We had profit earlier, so we were able to leverage on that one. And remember, what we did here yesterday is that we are going to be having a buy stop order above the 138.750, just in case price action takes us out of that sell position and breaks out of the resistance line to the upside. And as you can see what happened here, price action moves significantly well in our favor. Remember, at the beginning of the week, we had our TP target for our buy position within this yellow window that we have here between the 139.650 and the 139.100. So we had our TP target hit here yesterday, and congrats to everyone who had been part of this profitable journey. So well done to you guys for being on standby to catch that opportunity. So now that we are going into the London and New York session today, what is going to be our plans? How do we intend to trade the USDJPY for today? Well, things are still looking very, very bullish in this market, as price action, as you can see, since the beginning of the week, has consistently found higher highs and higher lows. And what we want to be doing here is to acknowledge the higher lows by connecting the series of higher lows together. And I think we are going to be having a couple of trend lines in that regard. So let's bring out our line chart and let's connect the series of higher lows here, and let's see what has really been going on in this market. So we have a very beautiful and uniform trend line figured out at this point after connecting the series of higher lows. So we have something like this. Let me highlight that a little further so that we can see things more clearly on our screen. So we have a bullish trend line here, which further emphasizes the strength of the buyers on this market. And you know how we do it. Whenever we have trend lines like this, it's going to be serving as a yardstick that will be guiding our trading activity for today. So what this simply means is that as long as price action remains above that trend line, we will feel comfortable in our buy position, and at the same time look out for more opportunities to buy the USDJPY. Now, with the situation we have here, one thing you will observe since the early hours of today is the fact that as soon as price action got into that area around the 139.700 level, we have been citing buy selling pressure around that area, hereby negating the attempt by the buyers to break out of that structure. So now the question at this point is, will the continued sell pressure we are observing around the 139.700 turn out to be a retracement move? That is one question we are going to be seeing. And if it turns out to be a retracement move, then there is a high chance that price action could drop probably during the early hours of today or the New York session into the trend line, respecting the trend line, or probably the 138.750 before another wave of bullish momentum happens. So we are going to be taking this into consideration while we continue to monitor price action at this point. And to further buttress the possible potential of a retracement move is the breakout of that 138.750 yesterday. As you can see, we had a breakout of that structure, and you all know that from a technical standpoint, whenever price action breaks out of a significant level like this, we expect at one point in time price is likely going to come back, retest the structure at one point, buy pressure above that area, will incite another wave of bullish momentum. And one interesting thing about this whole structure is that the trend line we identified that has been supporting the bullish momentum this week also shares a beautiful confluence with that 138.750. So we are going to see how price action will be reacting to that level to see if we are going to be buying at that point or selling, that is if price action drops into that area. So that is one perspective to this that we want to be looking at. And for scalpers, let us consider scalpers too as well, those who like taking counter trend opportunity. If you really do want to take advantage of that retracement phase, what do we want to see here that will support the idea of joining a retracement move from this point? So the next thing we are going to be doing is to bring out our line chart, as it will help us to spot a key structure we are going to be using to guide our move. So if you are a scalper, you are a counter trend trader, you might want to take advantage of this move. So we have a key level at the 139.400 level. So we are going to be looking forward to price dropping below that structure or retesting that level to give us a sign to sell. So with this whole situation here, you will see how this level had been a major determinant of price action since the later part of the New York session yesterday. So if we are going to be joining a counter trend opportunity to be part of that retracement move, and then we want to see price action drop below this level, retest the structure here, give us some selling pressure on our lower time frame. Of course, you want to scale down to a much more lower time frame from this current structure. It could be your 5, your 3 minutes, your 2 minutes time frame, whichever case it may be. Continued selling pressure should give an opportunity to sell below till the 138.750, which will be dovetailing to about 60 pips to 65 pips thereabout on that one. So if you are a scalper, you are a counter trend trader, you might want to take advantage of that move. But if you are not a scalper or a counter trend trader, I would advise that you stay clear of this one, as it needs a level of attention to manage that trade there, because you need to be on your screen, you need to move your stop losses accordingly to secure your position, because it is a counter trend opportunity. So now, one thing, as soon as price gets into this area, we want to remain patient, secure all sell positions, and wait out to see how price action reacts to this level to determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So that is that on this current structure here. Now, the next question we are going to be trying to solve here is that what happens if price action does not drop below the 139.400, and if it does not drop below the structure but instead continues to find higher highs, then in that case the whole structure we have here is likely going to transition into a trend continuation pattern. And as a result of that, I'm going to be risking, of course, a buy stop order above the 139.700. Since we are already profitable so far this week on the USDJPY, we can afford to test waters with some of the profits we have made to test the chances that price action will continue at the breakout of the 139.700. So if it breaks out of that structure, we are looking out for more opportunities to buy the USDJPY. But if you are a conscious trader, you need further confirmations to happen. You might likely miss that move. If it does happen, then you might want to wait for price action to retest the structure, give us some retest of structure in our lower time frame before joining that move to the upside. But mind you, the market might not give us that kind of retest of structure, especially when we are on a very strong bullish momentum since the beginning of the week. So these are my views here on the USDJPY. It has been a wonderful moment with you guys. This is my last pair for today. So we were able to trade the USDJPY, the GBPUSD, the XAUUSD, and the USOil spot for today. So I'm very confident that we are very ready to be part of the London and New York session to take advantage of trading opportunities during that time. And for those who had missed out so far, don't worry, you will be seeing the video come up on your notification, and you can with timestamps on how to navigate to the scopes you want to be watching. So thank you very much, guys. That's been a wonderful moment with us guys, with you guys here, and looking forward to seeing you right in the comment section on both my TradingView platform and my Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.